Hey everyone, I'm John Robinson from Blueprint. Today's June 30th, 2022, and this is the monthly asset allocation update video. This month in our co-founder's note, we write about market timing and ask the question, is everyone a market timer? And I will not spoil it for you, but we feel like, particularly in the midst of a high volatility environment, as some advisors and certainly driven a lot by clients and client emotions, there is a temptation to go in and try to bottom pick stocks as they've fallen. And the key message for us is, or from us, is that market timing is not a plan. Market timing is a tactic at best. And so for us, as we employ a comprehensive investment process, we would encourage you to do the same. And if that involves trying to bottom fish in the equity markets, then so be it. But we'd encourage you to do that with a plan and do it unemotionally. But as far as our process goes, going into July, we are really experiencing very little change in terms of timeframes and intermediate and long-term trend timeframes that we look at to make allocation decisions, as well as real estate. Real estate remains in a downtrend as well over all timeframes. You're going to see this is a repetitive pattern here because treasuries, as rates have increased this year, particularly longer duration treasuries remain in entrenched downtrends over all time frames. Tips as well. Really the only change this month in terms of our asset allocation at a high level is gold. Gold will decrease as the long-term trend is now confirmed on the downside. Gold has not responded well, even in an inflationary environment, even in a falling equity environment, which are really the two environments in which you would hold gold. It's been very choppy this year and will decrease in our portfolio. And so where is it going? Well, it's going to where a lot of our exposure resides right now, which is ultra short-term duration bonds. You know, we're at our max allocation there. The duration there is 30 days or less. It's increasing because it's taking that exposure from gold, but it also holds the exposure vacated by equities, real estate, and longer duration fixed income. And that's been a process over time as risk has gone up and as trends have declined, or at least confirmed declines over both timeframes we follow. We've simply handed that exposure off to very short duration bonds. What that looks like graphically is we're taking the exposure from gold as it's in a long-term downtrend now and handing that to fixed income of the ultra short-term duration variety. So what are the key takeaways? Well, equities remain in downtrends. We wrote last month coming into June that we really caution, particularly emotionally, we caution you to, or at least we want you to be aware of that, you know, being very defensive right now, we fully expect a bear market rally and a bounce back, probably of a violent bounce back, if you will, one with high velocity. And this is very natural in bear markets. And the data says that, you know, it's not an aberration. In fact, it's a confirmation that we're in a bear market, that volatility remains high, even if it's to the upside. So don't get sucked into that. We're not going to get sucked into that. Our process is certainly not going to get sucked into that unless trends reconfirm on the upside. Changes this month involve reducing exposure to gold and handing that to ultra short-term duration fixed income. And lastly here, act with a plan. We have a plan. By now, if you've watched this video, if this is your first time watching it, know that we have a comprehensive plan. If this isn't the first time you've watched it, you know that we hit on that every month in our writing, in the co-founder's note, as well as this video. And you know, we ask the question, is everyone a market timer? We don't believe that that's actually true, but we do believe that it happens more often than people would like to admit. The point is we don't know where the low is, and you could be taking a massive amount of risk by buying stocks here, particularly indiscriminately, just to assuage yours or your client's emotions without a plan for getting out of that stock if it moves against you by some amount, and that's an amount that only you're going to know. But if you're going to act now in terms of bottom fishing, we would encourage you to act with a plan. If you're not, we would also encourage you to act with a plan like we do. If you want to know more about what that plan is, go to blueprintip.com. We talk about our rules. We're very transparent with everything we do. We are systematic, but we are not black box. And if you want further details, you can reach out to me. My information's there on the screen, my phone number and my email address. Lastly, I would just ask, what can we do for you? Right now, we're producing a lot of content that talks about what the data says about bear markets. We're producing a lot of content now that hopefully you can take and then immediately transfer that information or that knowledge in your own way or in the way that we talk about it to your clients to help them through this process. This is a very emotional period. Bear markets always are. Bull markets always are. They're just very different in terms of how the emotion shows up. So with that, we hope you have a great 4th of July coming up here. Continue to have a great summer, and we look forward to seeing you back here at the end of July. Thanks.